So today let's focus on knowing the FOMO model. This is one of my favorites. So let's make it a little big and see how it all goes. So the fantastic thing is good morning, good evening, good afternoon. You are all alive, living and learning something new. So I'm so excited. I'm so happy today to teach you, or I shouldn't say I teach you, share my examples and my consulting experiences and many other things. You will definitely see something really big opening inside you after going through this entire video. It might be a little long, but it will change the way. And this is part of an decision making course, and that will change the way you look at things, how you perceive things, and how you take decisions. Because FOMO is the one decision made me to lose much money, and FOMO also made me to realize many things. So I thought of sharing you this. So let's go into the what is FOMO. Simple terms: fear of missing out. Fear of missing out. Simple. You are not making a decision here. If you are using the FOMO, the fear is being left behind, and it is balance sheet. So why I'm saying a balance sheet? Balance sheet is not like a day one or a day two thing. It is like a multi-year thing, which whatever assets or liabilities you build, you can see it clearly in it. Now, why I'm saying this? Let's think 10 years back, you have taken a loan of 10 lakhs. Maybe it is starting of your career, maybe you're taking 20 lakhs based on your max loan availability. And you thought investing in stocks is a great idea because by that time you read around you were during your office hours, you was linked to CNBC or whatever news channel, reading Economic Times or whatever you're doing, and you felt you read 100 or 200 books. Take it granted. Now, after reading all these things, also you felt like, okay, I can invest in stock markets, and you have taken that money and you have invested and you lost money, and so many things has happened. At the end of the day, there is other guy who with the same 10 or 20 lakhs, he did a down payment for the house, and his house became 1 crore plus. With 10 lakhs, 1 crore plus. Now you still did not make 20 lakhs on it. You still around 15 lakhs here and there. So the point is, this happened in 5 years. This is a real time case. And the point what I am trying to say here is stock markets, and I have given a clean or a positive case for the real estate here, but there are scenarios where real estate, you should know where you're buying and what you're buying. We'll go into the details. It is a very long session today, so let's have fun, have a coffee, or pen and paper is for sure. If you don't have pen and paper, you will not, it looks like it's satsang and it will be very nice while listening, but if you have to do a retrospective, or if you have to do it, you have to learn. Yeah, as I always says, repetition is the mother of memory. So if you something has to build inside you as a memory, it is good that you have repeat again and learn these things. So there is a number in the Indian proprietary market that represent the gap between what a flat is worth and what it sells for during a limited units remaining launch time. The gap is not created by the property; it is created by the fear of the person buying it. So, as I said, like stock market, the same thing is in the property also, because I want to give the other side of the story also. The other side of the story is the guy thought like everyone are buying the property, I should also buy, and he went and he did the down payment. Like nowadays you have pre-market before RERA coming also, people do 20 80 10 10 50 50. I mean, it all depends upon who is the buyer, and I mean, it's not, I mean, I'm sorry, it's not the buyer, who is the seller, and where is the location, and supply demand, pure economics. Now, the guy, whoever is buying, the buyer used to be beware across the world. It's not seller beware world. It's a buyer beware world. Now, you buy something, suddenly what happens? You bought an expensive thing because everyone are buying. You are also bought it. Now, let's think you're buying a 2 crores worth of a home where the locality is all like 40, 50 lakhs, 60, 60, 70 lakhs. You are buying the most premium thing. All the apartments nearby are 60, 70 lakhs, and now you buy it 2 crores things. Now, definitely it will be 2 crores. I'm not saying it will fall below 2 crores, but it will go beyond 10 crores. This is for the complete down payment if you do. Let's think if the same 2 crores down payment if you have, if you do the same math, if the markets are down at that point of time, the PE is somewhere around 17 or 18, even at the compounded 11%, your money would have been doubled by that time, 4 crores. So what I'm trying to say is it all depends upon what is the asset class. Why are you? I'll come to the courses also here. People who buy courses, all those things. But let's go over there. There is a trade in your demat account. You entered 3 weeks after everyone else. A startup you joined before because your batchmate joined once. A school fee you committed to because the neighborhood child went there. A lifestyle you are financing because Instagram feed made it look like normal. None of the decisions were made by you. If you see demat account, I have given an example. People just buy. You are buying based on the news. The operator sells once the news is out. Maybe the operator is giving news to the news channels. Things like this. And startup again, like everyone are software. No hardware guys. Now people want to build big data centers. They need very good guys other than software. Startups just joined and people joining a school fee. I think this is ridiculous. Sometimes you see masters fees, masters in some colleges, decent colleges, fee is less than kindergarten admission fees is kindergarten whole year is or 2 years. Same masters 2 years will cost you 5 lakhs. The same 2 years kindergarten is costing 5 lakhs. What is this? Or greater than 5 lakhs? What is this? What are you trying to? I mean, it's a straight question to the parents who are keeping their kids. I mean, what is the outcome? Outcome based education. Look at it. At the end of the day, after coming out of the kindergartens, they'll only know the alphabets, maybe a couple of words in English. For that, are you making you're making like masters? I don't know what's your wish, where you want to take. Not that you should not do. If your cash flow is around maybe 10 lakhs a month, it's okay. Give on 50%. It's okay. But your cash flow in a year is 10 lakhs. Why are you going with 5 lakhs out for your kids, two kids? Think about it for kindergarten. It's the decision, the same decision for the masters might differ, but the same decision for the kindergarten, definitely. You know what should be done. So people like to buy extreme high-end tech by just seeing the Instagram. Are by Instagram, they're that is their outside of their life. There are many Instagrammers who kill themselves, being those are all suicides, and how the messages are coming outside the public media. Why are you trying to be one of copying them, looking at them? I don't know. So these are not the decisions made, these are the decisions implied, something like that. They were made by FOMO, so fear of missing out. The cognitive bias that converts social comparison into urgency into action, and action into balance sheet, and it takes years to understand, the longer to recover. FOMO is not a feeling, it is a decision-making system that has been running your most expensive choices while you are believed you are thinking. This module makes it measure it and gives you tools to switch it off. So I if someone would have taught me this when I was around 20 years, I mean 15, I would have seen very liked it, because in teenagers your intelligence is overtaken by your hormones. When you are in that kind of situation, FOMO is a very expensive thing. I have faced it. So I have seen many people who have faced it. Every expensive impulsive decision has a FOMO somewhere in its ancestry. The fear came first, the justification came after. So I also see people who take FOMO decisions have childhood trauma or ancestry for it. So let's go ahead. Let me go ahead and grab my jacket. It looks like very chill out here. So it's very nice. So FOMO is not excitement, it's anxiety. Wearing the costume of opportunity. Every time you buy something, you feel like in stock markets, it's an opportunity. I'm missing opportunity. I'm missing opportunity. I should not miss it. But in reality, will there be no other stock like that? Will the competitors, the same stock, will there not be a competitor for it? The example, classic example, if I say Walmart was a great company in, even now it's a great company, but the PE ratio is around 50. When someone purchased it, the PE was around 50 plus. Almost like 10 years, the price was the same, but the PE came down to 15. You can look at the chart. Maybe I can look at sometime when we discuss in the questionnaire session. We can discuss that. We can look at the chart. You you'll go bonkers. The same thing. There are companies where the PE is 5 and the growth rate is right. I mean, I in one of my videos, YouTube, I showed how to identify multi-bagger. That's a different story. But let's see it is. Because you have a FOMO pressure inside you, because you have anxiety, it's coming from your spouse or from your parents, from your friends, whoever it is causing you. Let them have the choice of telling you, hey, you're not studying. But if you're really not studying, then there is something mistake. But if you're studying and if they're not feeling that you are studying, you should know where you are and you should know your numbers. So the money part also from your spouse and all those things. So it is anxiety wearing the costume of opportunity. People think by buying courses, by buying stocks, by buying real estate, they will become rich. No, you should know what you're buying, when you're buying, how you're buying, why you're buying. Until unless you have the depth of what the action, I don't want to say only buying, until unless you have the depth of the action, reality in and out, every action, every decision you take will be a, did you ever thought, is this decision bigger decision is because of FOMO? So FOMO is nothing but a social comparison. Sometimes the social comparison, I'm saying FOMO becomes, when FOMO becomes pressure, formula for FOMO pressure. Think like this: perceived scarcity. Sometimes they will say only 5 seats are available, only five, only 10, only 10, only 20 seats are available, only 30 seats. That's okay. There'll be somewhere else it's open. Why are you so scared? Scarcity is the kind of a mindset which most of the people who come up in the millennial age group, and even in Gen Z, you can create. It depends upon how you brought up from the parents and all these things. Speed of decision, social comparison. You have to look at these all things will make you FOMO pressure basically. Opportunity looks like very limited and it's closing. In 30 days, we'll close. After 30 days, will he close his business? No. After 30 days, after next 3 months or next 1 year, there will be a course again coming, new course or the same course. You'll say, why are you being FOMO? Will you take 100% action on the course? If you're not taking, you're getting into the FOMO mode without action, without, again, like action is also like buy, your brain might be thinking, if I take the buying action, everything is done. But buying alone is not an action. Implementing the course is the real action. The formula is exploited deliberately by real estate developers, stock promoters, peer pressure, social media. All marketing, majority of the marketing, they want to expose, they want to exploit you. So make sure you don't get exploited. Fortunately, join it, and it works because it bypasses the analytical system before the analytical system has given the chance to vote. So it is like this. In business intelligence, we have transaction system, analytical engine, and transactional engines. So like this, you should have an analytical engine or analytical system. Every decision, bigger decision, has to go through the analyticals. Don't fall to this FOMO. It's 12 hours. Again, like FOMO doesn't mean when we come to analysis, don't become analysis paralysis. You should have enough frameworks behind the decisions which you take. This is what the whole course we will talk about this much further. So FOMO, what FOMO is not enthusiasm for genuine opportunity, informed excitement about a well-researched. Now you are already working in a company, and the company gave you an opportunity to go to outside of the country where you can make 3 times or 4 times or 5x or 10x of your current salary in where you are making. That's not a FOMO, but they say you have to join immediately in 2 months because there is a logic. In 2 months, the client wants to build the company, and they want to give you that money. In 2 months, if they don't do it, your company's competitor will go and pitch someone else, or the company will go to somewhere else. So that is not a FOMO. That is an opportunity. But you have to do it in 2 months. There is a timeline, strict timeline, maybe in a month, maybe in 15 days, who knows? But still, that's an opportunity where you're making money is coming into your bank account. What FOMO is? Anxiety about social exclusion discussed as decision making urgency, specific fear that everyone else is gaining something you are going to left without. It's like when new iPhone comes up, the ads are like, "Oh, I have an iPhone. I have an iPhone. If you don't buy it, you'll miss it out. No, you will have a next version coming in another next year." So that's a FOMO. Diagnostic said, "Would I want this to be nobody else wanted? If nobody could see that I had it, if the answer is no one or answered it, FOMO is the decision maker, not you." So just you because you want to show off the branded clothes or branded everything. So it's like that. So don't fall into the trap. People don't buy assets, they buy stories. FOMO is what happens when the story gets louder than the analysis. So important quote. Uh, let's make it two. So let's go into the questions. I think your honest answers is not maybe different, but the FOMO decision, 6 questions, what that map every bad call you have made. Right? So we have a framework. I will not go into the respective framework, but you can say who, what, when, where, why, and how. So who is FOMO's primary agent? So look at like this. The specific person, peer group, or social signal who perceived success most reliably activates your comparison anxiety. Your batchmate who started a company in the LinkedIn feed that curates achievements and removes failures from the visible records. I think in the survivorship bias and sunk cost fallacy, I think mostly in survivorship bias decision model, we discuss about that. But look like this. Why are you joining branded companies where they pay you less than mid-sized company? At the end of the day, your bank account, money in your bank account is more important than the brand which you hold. Because of the brand, are you able to leverage anything? If you're not able to leverage anything, don't do anything. On the FOMO, that's a FOMO. FOMO hijack, what category it falls? For most professional real estate, getting left out market. So sales guys in real estate, obviously they have their own targets, you have your own targets and they have their own targets. So don't fall to their targets for career joining because others are joining. Education, the school fees, lifestyle consumptions. So again, like because your friends, your colleagues are sending their children kindergarten to 2 lakhs, 3 lakhs a year, you don't have to, you have to chill out. If you have something called intelligence in your brain, if you can decision, if now you join this course, now since you joined this course, I presume that you have a good knowledge. So never take the decision based on form of marketing by someone or comparison, career, education, whatever it is. When does FOMO strike hardest? Three triggers: family gatherings where comparisons are explained. People say, I'm having a 10 lakhs gold chain. Are you having a 10 lakhs gold chain? You don't know. You may little scared not to carry 10 lakhs worth on gold because that's how the society live. But you might be having 30 lakhs worth of gold bonds, which might be giving 2.5% interest, and capital appreciation, which is secured. You can have a smile. So don't fall into the family gatherings where companies where comparisons are explicit, unions where trajectory is visible, social media in the evening, real estate punches, IPO windows. When an IPO is happening, you should look at like this. What are the competitors in the existing market they are doing? And in sense the PE ratios, the EPS, the existing order book, all those things. The new IPO might not have all these things. They are just coming out because the existing PE or venture capitalist who have invested in, they want to exit. They want the exit routes. Who are the exit routes? The retail. Will you be the guy on the FOMO path for IPO? Think about it. If you're joining this course, you should not. Okay. FOMO already left the mark. The purchase driven by why? Where? The purchase driven by comparison not needed. The investment entered late in the cycle, the job market, because peers are moving. The loan taken in a fun lifestyle that became did not. FOMO track. People takes vacation taking a personal loan. I really pity. Why do you want to take a vacation on personal loan? If you leave, it's like this. I think in the financial wisdom course, I'll talk about all those things more detail. So let's go ahead. Why does FOMO override rational analysis? Fast, emotional, automatic. Sometimes you have to look at yourself. Are your decisions since your childhood, are they based on fastness? People say you have to take fast decisions, but people never talk about what is the impact of a fast decision. What is the impact of the fast thing? What is the dish? What is the impact of sometimes you take some decisions. I mean, you be your own mentor and you coach, or you be your own lawyer. See this. If you take a decision on your own, um, consider like this: you entered into a relation, and based on urgency, based on the need. I should not say need, but peer pressure, social pressure, family pressure. What happens? Think about it. Rational analysis, okay. Why? Because it operates in system one fast emotions before system two as an activated. What is system two? System two is analysis. You should have analytical mind. That's why when you look at the big companies, fine companies, they'll say analytical brain, critical thinking. Why do they think you should not fall under the FOMO? If you fall under the FOMO, you don't have that analytical thought process. So how does FOMO end if unaddressed? A portfolio built on cycles and hypes, a career shaped by peer trajectory rather than personal strength, a lifestyle financed by comparison, a network that looks impressive from the outside and structurally fragile inside. FOMO's a long-term output is not missing out, is a life built for other people's approval. So if you're building a life for others people approval, you are not living your life, you are leading someone else's life. So I don't want to give the answers out here. You do your stuff. We'll talk about the next thing. FOMO does not ask for your opinion. It generates a conclusion before your thinking system wakes up. So, as we are talking about system one and system two, system one is very fast. It's like there is a F3 or 3F, it's called fight, freeze, or fly. So, someone, if you see a thief, the policeman runs behind the thief to catch him. But a normal person get freezed. A person who has a fear runs away from the thief. Yes or no? Three F3. So a person like a police run behind the thief if he sees a thief to catch him and keeps behind the bar or jail. A person, normal person, will get freezed. Oh, what would happen? Will he steal my house? Freeze. And a guy who is a guy or a girl who is having fear will run away from a thief because he might harm you in the process of looting. So everyone have their own system. Now, what is your system? You have to identify where do you sit. Now, in the same way, when you're in decision making process, are you a fast decision maker or are you a slow decision maker? When you say fast decision maker, is it a 1 minute decision? And what is the impact of that one decision? Let's think if you're taking 1 lakh decision and your salary is one, at the end of the month, you get 1 lakh rupees into your bank account. That is your net salary. One decision of that 1 lakh, technically 160 hours is equal to the 1 lakh. If you take that decision in chutki mein, 1 minute, what are you trying to do with that kind of mindset? Question yourself. This is very important. You should question yourself. So I would say like you should be very, very I should not say caution, but invest some good amount of time and energies in building that system too of being analytical, being deliberate, being slow, rather than falling in the trap of FOMO. Because that 1 lakh 1 minute thing, maybe you thought like stock market, a derivative. I see people I'll say classic. I have seen in MBA, people do not know that puts and calls will have an expiry option. And they felt like the market will go up and they bought the put. People will buy if they expected the market will fall, they buy the puts. Market rises, they buy the call. But that guy did opposite and he's lost. And the second scenario, I know the other guy who has took the loan to keep in puts and calls. And that guy kept expiry puts he bought. He thought like market will fall and market didn't fall and he lost. After the expiry in a couple of days, it fall. His analysis is not wrong, but his fear of missing out is wrong. So that's why I'm saying if you have a teenager, show this video. This is just a course which is going to change your life. I have seen myself, I changed a lot. I've seen many people who have taken this course have changed a lot. So I don't want anyone to miss this out. So here clearly says, they say when someone is selling only 3 units left, creates urgency. So system one is in control. By the time the professional thinks about the decision, they are not thinking. They're justifying a conclusion. System one generated 55 minutes ago. 45 minutes or whatever. Social proof, scarcity, implied status, anxiety. So look like this. The decision is based on social proof, comparing yourself with someone, your relatives or your neighbors or in your community or in your office. Scarcity amplifier, only 3 units, only 10 units, only 20 people, like courses. The status anxiety engine, log kya kahenge. So that's one of our model, business decision model. The intuitive mind is gift and the rational mind is a faithful servant. We have created a society that's honors the servant and have forgotten the gift. This is Albert Einstein said. Most of us like Albert Einstein because he has a high IQ, but even then he lost his money in stock market because, again, like FOMO. The intuitive mind is a gift that rational mind is gift, and the rational mind is a faithful servant. We have created a society that honors the servant and forget the gift. So sometimes our intuition might say, no, but your FOMO will say SSS and fall for the FOMOs. So FOMO is so anytime you can take a screenshot of this one. I really like to keep this one. It will change the lives for sure. FOMO is a self-reinforcing cycle. Every relief breeds the next trigger. You buy one course a month, and second course, if you don't take any action and you don't see any results, and you buy the second course again. It's like that. It's in the real estate also. No free cash flow thing, positive cash flow thing. Again, negative cash flow. If you have money, that's a different story. If you don't have deep pockets, then you can't buy the second one at all. FOMO does not resolve the action. It resets. The relief is temporary. The action is permanent. As I said, like balance sheet, initially it will go on. It's like treadmill. The FOMO is combined of so now you see here, you observe things and then anxiety, then you get compare, then the timeline is compressed and you buy. So make sure you don't fall into it. The only break in the cycle is single intervention point between anxiety and so be careful when you are taking the decisions. I love Charlie Munger for his models and all those things. We'll talk about more in the decision models, everything. I like him. The world runs on individuals pursuing self-interest. The problem is when self-interest is defined by what everyone else wants. So now if I had to take a Facebook wants everyone of you to be part of the whole globe, be part of its network. Why? They want to sell their ads to the people, whoever wants to do advertising. So their problem is getting revenues, but their problem and their self-interest is also make more revenues. But their problem of making more money or whatever is that problem is when self-interest defined by someone else wants. Now you want to show off your new watch or new kada or whatever, new vacation, whatever you want to show off on, and then their revenue is directly proportional to what you want to show off. I love Charlie because the way he says is, I bought that 7,000, 8,000 book also I have. Let's go. The dot-com bubble, which was not the market failure, it was 50 million people running the FOMO loop continuously. So let's most of the IT people know the dot-com, but even if you are not IT, let's visualize this as a scenario. 1995 to 2000, NASDAQ composite rose approximately 400%. 400% return is very humongous in a matter of 4 or 5 years, and that too in indices. It's not driven by technology fundamentals, it was driven by collective form of institutions, retail investors, generalists, and venture capitalists, each observing, others gaining, each activating comparison anxiety, each acting before them. I've seen people who become billionaires, the next day they may become millionaires. So how hard it is. I'll not go into those examples and details now, but let's look like this. 1995 to 90 is an observation phase. I think you have seen the earlier thing. I have shown you this one, observation. So the same thing I'll try to show it here also. So you'll get surprised how the FOMO, the same infinite loop happens. Observation, then the comparison comes, then the compressed simultaneous peak out, flat out, and you lose the money. And whoever enters the FOMO in 2000, peak action, retail participation at peak. So I mean, I see many people losing money. So I opened some channels for the consulting also. If anyone have any issues with their investing, anything, you can connect. You can connect with me. You can message. You can see in the description. You can maybe wherever I keep this one, you can connect with me. And I don't want people to lose money somehow. And like that. So the bill arrives. Nasdaq drops 78% and 5 trillion market valuation arrives in 30 months. FOMO investors who arrived last lost most. I get tears sometimes when people's real hard money is lost. Maybe I'm emotional. That's why I'm saying emotional. Money is emotional. I am. So I don't want anyone to lose money. So be fearful when others are greedy, and greedy when others are fearful. That's what Warren Buffett says. So I want you to take this very seriously in your life, and don't come and invest in the peaks of the market. If you don't know, it is okay to keep in gold and silver. Who is coming in? Again, don't compare. At the end of the day, I think in one of the videos I have shown, in between 2000, as someone who would have invested the money in 2020, even in stock markets, best of the best indices, they would have still made less when compared to the silver in 2025. Silver has given almost like 24 or 25% compounded annual return compared to any other indices, compared to gold also. So it all depends what you are selecting. Are silver was nowhere FOMO in 2020. At least gold, I can think it's like a safe haven metal. I mean, I made money, but what I'm trying to say is I don't want others to lose money. That's all. The real estate market is the most precisely engineered FOMO delivery system. I don't want to say it's only real estate. It depends upon if you're buying in a real estate negative cash flow thing. That's it. You are so how you should not fall for the FOMOs. I will tell you. The FOMO example is a flat is 75%. The apartment is costing 75% lag purchased in the FOMO or value cycle. There are cycles for the real estate also. You should see the area which you're buying, or this EMI at 8.5 or 20 years, 65% month, 65K per month, and total interest 81 lakhs opportunity cost, and 15 lakhs down payment, component 12% or 20 years, 1.45 crores total. Form of real estate is 2.26 crores. A decision made 72-hour launch window. So most of the companies will say there it's only 1 week launch, 2 week launch. It will be closed in 2 weeks. Then you will go back and you will take loan from someone or do something. Consider you should, when you are investing money in real estate or in stock markets, there is something called cycles. There is something called value. You should not fall into the value traps also. That's why there is a real estate course from my side also, and the stock market course. That's a different story altogether. But we'll go into the decision. So when you take a decision, think like, are you taking a decision because of one of your colleague has within 3 days that he has paid payment? You don't know, your colleague might be backed up by his parents. His both parents might be government employees, or one of his parent is in a business or government employee. They're making good money. We don't know on the desk, under the desk. Perceived scarcity lever. So only 6 units remaining on 20%. Only 10% flats are remaining. So don't fall into the trap. So you did not buy the peak because you were greedy. You bought because everyone else did it. Not buying felt like losing. So unfortunately, humans, the cavemans, are part of the I mean, I said like unfortunate because we are still living like a caveman mindset. Caveman used to live in a community tribes because every day when you go to hunt, there is no guarantee that you will get in a hunt. But even if you get, let's think if you get in a hunt, let's think you hunted a deer, you are 4, 5, 6, 7, 8 members can't eat the entire deer. You have to share that. If you don't share that, that will get spoiled the next day. So as a society, I think there's some 10,000 BC or 20,000 BC. So all people as a tribe, they go for a hunt. So then they came together. Now, what is happening? That kind of mentality, the memory, the DNA, which we all carry, maybe, yeah, which we carry, which is like because the next person is doing, I should also do it. Now you are not living in a tribes. Now you at least after the joining this course, you have um, you, you can see what is the decision based on the community social pressure and what is the decision is based out of me. Get that analytical critical thinking out of your head before you take the decision. As I said in earlier example, 1 lakh a month, if you're making 1 lakh a month is saving, assuming even if you're making 20 lakhs, maybe forget about one. Let's take an example, why do complex things. The 1 lakh, and if you're taking a decision to buy a course in 1 lakh, and if you're not taking any action after buying that, you are in a FOMO. The decision what you were taken and based on the FOMO. So I'll not go into these details I've given in the earlier example. So maybe the only thing I would like to say, the hidden truth, why FOMO has happened, the WhatsApp group stocks had been in the market 8 to 12 months. The gain was an entry that they did not share. FOMO made Arjun the liquidity for someone else's exit. So I'll not go deep into this, but let's see how much of your portfolio, career, lifestyle was built by, and how much was built by FOMO. So how much was built based on your strengths and how much was built on a FOMO? So answer as the person who made the decisions, not the person who justifies this afterward. Because every time you justify a question, you are still living in the same old person. I want, after going through this course, which is like 10 plus or 15, 20 models, I want you to be version 2, Robo 2, like that. You have to be upgraded version, not a downgraded version or the same version. That's why I'm bringing this. I myself has upgraded a lot. Every time I look at them and I see upgraded myself. I don't I don't want you to be a downgraded guys after buying this my course and after being in touch. So the investment test, I have made the test in at least one investment in the last 3 years where I entered primarily because people around me were talking about it, not because they. So I know a client who has came up to me and he said his problem, and I would like to share with because the names are not there. He has purchased the builder. The builder started like 20, 20, not 50-50 thing, but it is a very reasonable price. He is technically paying only 25% of the entire 100% what he has to pay, and you get free amenities because he is becoming a pre IPO kind of a market. So he said like he entered, he already bought 3 things, but there is one person who wants to exit because the builder is not building it. If the builder would have bought, but he's saying I'm not getting permissions. The government is asking, all this bribe, all those things. I mean, all these things happens. So that guy actually, there are so many things. I don't want to go into the case very detailed. He has taken the 4th one also. Now that money, actually, the 4th one, he has money in the silver when silver was around $30 per ounce. And then his money was even after 3 years, his money is still like that. And now the silver is around 1800, 8800. It's almost like 3 times. What I'm trying to say is when you're taking an investment decision, I'm not saying the first 2 houses he bought, it's okay. I mean, nobody knows the builder is good or bad. Everyone thinks. But the builder did not took any action almost like 2.5 years, and you still went. It's like sunk cost fallacy. I'll talk about sunk cost fallacy there. So don't try to get into this FOMO. and he has become an exit for someone else. I felt next time you have money, don't go into this, and do not keep in the same area at all. I did some consultation on the money part. That's a different story. The solution what I've given is different, and he liked it, and that's a different story. Uh, the property test. I have committed to a property with the limited units price. This is not a limited units price, but fourth time when he is buying, that's a limited units, because nobody is trying to sell. Everyone is holding on to their units, but someone has sold it because he just wants to exit. He wants to go somewhere else. I don't know, man. The career test. I have taken a career decision primarily because peers, batchmates were making similar moves. People I have seen in big colleges, I don't want to name them, everyone get into consulting, consulting. The consulting roles are, if you're in consulting, you'll become too old like me, because I was also into consulting for a long time. Sometimes you have to go internationally multiple times in a multiple months. Maybe in a couple of months you have to go multiple times. What would happen to your health, the food, the circadian rhythm, paisa, money. The visible test. There is at least one school in your lifestyle. I mean, it's beyond your lifestyle. As I said, real examples I have given earlier. Like, let's say you're making only 12 lakhs in a year, and someone for kindergarten, both of your kids, it's costing 4 lakhs. Will you, if you're keeping your like 4 hours, 4 into 66, 640 hours, you are just being slave. I don't know. You want to do that action or not? There are schools, better schools for alphabets. You can teach alphabets in your home. You can buy a fantastic iPad or a laptop, or have a good TV which can teach you kids. You can have join the programs. I think there is. I was part of a singers group. There is one wonderful PME collections. It's just cost you $10 a month, the subscription. Anyway, I'll not go into that, all those details here. The career test, visibility, the LinkedIn effect. You see some LinkedIn groups influencing decisions, and you take the decision. So don't take the decisions just like that. Bring that analytical brain. If you can't take decisions, it is absolutely fine if you cannot take the decision. But you going through this course, after going through the course, you should take the decision. If you can't take the decision, if it is a bigger decision, pay that consulting fees to the respective consultant. You can pay to me, and I can help you. So there have been taken decisions in FOMO or sunk cost decision or survivorship bias. There are many models. We'll discuss all of them. So the most dangerous investor in the room is not the uninformed one. It is the intelligent one whose intelligence is being deployed to justify a decision FOMO already made. So people who justify their wrong decisions, simple. So FOMO does not send a bill; it sends a balance sheet, usually 15 years after the decision. I know people. This is a relationship course content. I will tell you, but okay, not now. Not now. Let's go into this late entry investments, real estate premium, career trajectory discoveries. So lifestyle inflation compound and compounding lost. So compounding loss do happens if you do not know. Let's think there isn't a cycle. It's upwards. Now, if you come here, the market will go down. What happens? You're losing until unless you next cycle will be upper than, I mean, topples this one, it'll go beyond this. But are you so patient to go up to that level? Do you have the 30 years, 20 years patience, that kind of steel nerves? And when I was reading Market Wizards, he says the best people who make money are people who have nerves like steel nerves in their body. So if you have steel nerves, you'll definitely make money. But again, like if you're doing intraday derivatives, you don't have steel nerves. So the FOMO basically, it's like balance sheet thing. It's like lifetime impact sometimes. I don't want to say this will impact your relations, this will impact your mm, everything. It impacts everything. So be careful. Wealth is what you don't see. The FOMO portfolio is what you spent on what everyone else could see. So if everyone are buying, don't buy it. As Warren Buffett said, everyone are selling. That is the time you should know why you are buying. It's not like market is falling, you're buying. I think in financial wisdom course we'll discuss that. Duryodhana did not want the kingdom. He could not bear that Pandavas had it. So he's happy. Duryodhana is very happy with Dhritarashtra being his. I mean, Duryodhana is the uh, princess. He's okay with his father being, but Pandavas took the 50%. I mean, they didn't give the good land, but the Pandavas just built a great kingdom with the help of the Lord Krishna, and that Duryodhana can't handle it. Because of the FOMO, he lost his life. So Duryodhana FOMO running, half a kingdom, legitimate and stable, comparison with Pandavas, unbearable. Shakuni compresses the timeline, the ice game entered in under anxiety. Each loss deepens commitment, war initiated to recover status, everything lost. So so professional aware professional FOMO managed portfolio at 45 lakhs, stable and growing. WhatsApp group shows a peer of 90 lakhs, comparison anxiety activated. 48-hour rule applied, independent analysis run, no action taken for anxiety. Portfolio compounds to 1.2 crores. The Pandavas kept their kingdom and kept their judgment. So just Pandavas can fight with the Duryodhanas, because they did not give the kingdom was all kingdom was not bought by Dhritarashtra. It was all bought by Panduraju, because Panduraju was very capable guy. But just because Dhritarashtra is elderly brother to Panduraj, he was sitting technically. Dharmaraj is elder than Duryodhana, so whole thing should go to only Dharmaraj, but Duryodhana, Dhritarashtra did not allow it. So it happens to you also if you do like that. Duryodhana's war was not for the kingdom; it was against the image of Yudhishthir's or Dharmaraja flourishing where Duryodhana could not see it. FOMO has staggered larger conflicts of some smaller reasons. See how stupid people are. How for simple reasons you will not take anything at the end, but still you want it is coming to you. Wait, if you don't, it is coming to you. The questions that cut through every FOMO justification, there are not record well, each one requires 60 seconds of honest answers before you move past it. The last big decisions. Would you have made it exactly the same time at the same price if you have seen anyone else make a similar decisions? If the answer is uncertain, then uncertain is the data. The decisions needs to be based on the data. Decisions should not be based on the emotions. That is the most important thing. Decisions should be based on the framework. Decisions should be based on the experience. If you are making decision based on emotions or uncertainty or not having data, it's a balance sheet impact. Name the benchmark. So EMI audit, you can see an anonymous portfolio, and so all those things you can see and how things happen. So the next one we'll talk about where FOMO has taken you, where independent analysis will take you. So you are in a situation, maybe I'll go a little fast, or maybe it's okay. Very fast. Rich people go fast, they go calm and cool. So this is what I want to say. You fastness again, like FOMO. If you are in a situation where you don't want to do things, don't do things. Apply your analytical brain. Go calm. So first example is entered market rally 14 months late, bought at a peak, and because of the WhatsApp group and community enthusiasm, Facebook groups, Telegram groups, listings, no financial decision, and 48 hours, the guy, if it's a peak of the market, one of the metal is in low price. I'll talk about financial decision, financial wisdom course, but let's think you invest in gold. Your markets at the peak to bottom, it can make a 50%, but gold does not do that. I'm not like this is only educational purpose again. So you should know what to do. One, the 78 lakh flat during 72-hour launch, only 4 units remaining, 30-day real estate, no property commitment within 30 days of the first project introduction, separate urgency from the analysis. You analyze the market, what is the square feet around the market, and you include the inflation or maybe compounded by 11%, will you see the same price coming in 4 or 5 years by the time the building comes into your hand? And look at all the possible scenarios. If you don't have those scenarios, get the consultant will help you. So I can help you, but I need to know your problems. Career move was taken because of the three batches joined the same sector. If this is happening in mid-sized colleges, they just bring TCS, Infosys, everyone. You have a great quality as a human being. Everyone's unique is unique. Rather than focusing on your skills, everyone are joining the same company. I will also join. What would you do with after that? If your skill set is 10x to the what the company is paying, it is okay even if you fail. You will recover it. People want um, risk managers in the organizations, and if you can take the risk, and if you can make, and if you have seen ups and downs in your life on your own hand, it's a different ball game altogether. You are playing an experienced and more matured person. Critical thinking, analytical thinking kicks in every time. The So I'll not go into details more for the school fees, which I've discussed. BMW purchase, classic case. I see people buying luxury cars. A car, no, I'm not saying, I'm not against luxury cars. You can buy luxury cars if you have the cash flows. I'm not denying that. A car is a tool which takes you from a place X to Y. That's all it's need. Now, will it take you in a leather? Will you take it in a non-leather seats? It's all up to you. I'm anti-leather. I don't like animals to be killed for my luxury. So I'm a vegetarian, so I'm like that. Consumption visibility. Would I want this if nobody would could see it, if uncertain for 48 hours? So Duryodhana, comparison anxiety.com, early crypto. Oh man, crypto. I see many people losing money. So I don't want anyone to lose. If you are in crypto FOMO, connect with me. I will cut the FOMO. The middle column is not a wish, it is a sequence of specific cultural rules. Every rule can be installed before the next trigger. FOMO requires no preparation to activate. The antidote does. Install it now. That is the most important thing. Install it now. The past is what happened without a framework. The future is what happens with one. The middle column is the framework. It takes 20 minutes to install FOMO, took 15 years to run. Yeah, the same. Many people will run on the same stories. Warren Buffett's competitive advantage is not intelligence. If you look at him, there are many people who read library books. If I have to say in the same in his words, if more people, if reading books are more, librarians would have been the richest people on the world if reading books is so great, or if you are surrounded by books. It is the structural inability to be moved by what other people are doing. So how many librarians will not move what others are doing by not comparing? So principal newspaper test, Buffett evaluates every decision by asking whether it would be comfortable if it appeared on the front page of the no. Is anyone else doing it? The test is independent social proof. FOMO requires social proof. The test eliminates their input. So the second principle, circle of competence. I think all this circle of competence, 10-year origin, Omaha distance, all these things we'll discuss in the financial wisdom course. I never attempt to make money on the stock market. I buy on the assumption that they could be close the market the next day and not reopen it for the 5 years. Fantastic. Then there is no FOMO. So the four structural rules that makes FOMO impossible to execute before system 2 has voted. The goal is not being right with the crowd. The goal is to be right. So never try to be, as I said, like the caveman thought process. The caveman thought process is um, being with the tribe, being with the community, being with the people. So separate yourself, take 48 hours when you're taking a decision more than 1 month salary. I don't want to say anything. Everyone have their own 1 month salaries or cash flows. First 48 hours analysis, first rule, contrarian awareness trigger, the visibility test, all those things. Take a point, and then if you can't do it, I'm there. Cancel it. Social media is not your competitor's balance sheet. Is not your competitor's balance sheet. It is their highlight reel. You are comparing your insides to their outsides. So I like Naval Ravikant a lot. Social media is comparison theater. Everyone is performing. Nobody is showing the backstage. I want to say something. In Mumbai, when I was Mumbai, one day, luckily I got a chance to observe a movie shot. It is a 10 seconds thing which will come in a real movie. They shoot for I think almost like 3 to 4 hours. I was really surprised. So people, you should actually look at the backstage, how many things happen, how many things happen, all those things. So don't look at the social media and the media and their brands, all those things. Their balance sheet, that's not their balance sheet. They might be just taking for rent and they're giving off. That's a opex cost, not a capex cost. But if you are buying, that becomes a capex cost for you, not an opex cost. You are not renting. The consumption died. So all those things, the survivorship audit. Social media shows the surviving and successful outcomes. It does not show the failed businesses. Yes. What is the failure rate in the category that I'm not seeing? So look at it. When you're starting a business, also there are many business rules. You have to find out good chartered accountant, good lawyer, good bank, and all those things. So without doing it, it will cost an issue. Reed Hastings did not exit DVD because everyone else was streaming. He excited because his own analysis said so. The FOMO, Blockbuster, and Netflix. Independent analysis, what Netflix did, and FOMO, Blockbuster. Because we can think like this one, protected DVD because everyone else was watching it succeed, did not act for independent analysis outcome. So when you are highly egoistic, also you can fall under the FOMO trap. I didn't talk about the ego till now, because ego is nothing but in this case it's pure attachment to what you did. You may fear of missing out. Okay, everyone are going out, I will be in my DVD business. What happened to Blockbuster? It became a bankrupt. The most important thing is to be right, not to agree with the consensus. The consensus is trailing indicator. I like this one. The consensus is a trailing indicator. It's not a leading indicator. Make sure you understand that. Same market, same moment, different frameworks. One was made by social proof, one was made by independent analysis. The crowd's behavior is a lagging indicator, independent analysis leading one. So currently it has 250 billion, and this is Blockbuster, is a bankrupt. Blockbuster once is highly bigger than Netflix. FOMO running versus analysis active. Same intelligence, same income, two completely different balance sheets. This you can read it, how people can lose the money on the name of the FOMO. You be anti-FOMO every time. FOMO, anti-FOMO, 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 analytical mind, critical thinking. Dronadri. I can help you there. Independent thinking is not contrarianism. It is doing the analysis before the crowd tells you what the conclusion should be. So when you're doing, I mean, when Buffett takes a decision, they take a decision based on independence. What is the company's mode? What is the competitive advantage? Looking from the Porter's model, he has his own way of looking things. You should have your own way of looking things. The more than that, models, I think the models which we are seeing here also will help you a lot. We are not talking about the financial models, but we will talk about decision making models in the financial system. We'll talk about decision making financial decision making models. The professionals on the right is less ambitious. They're aiming at the target, they said, not at the one the crowd handed over them. So make sure, if the crowd is pushing you every time, don't. If the crowd is, see, in earlier case the crowd is giving you money, then you have to do it. This is where the brain do not kind of see things. If crowd is giving you money, then take it. Here the same crowd is not buying it from the blockbuster. They're going there. He didn't see the market share. He might have seen the market share going to Netflix, but he still took the DVD because that's how the FOMOs are. So don't go into the FOMO mode. Your assignment before the next foremost trigger arrives, install the structure that makes it survive. So go through this course as many as times possible. And because why I'm saying, for someone it's one time is enough, for some two to three, four, 5 times. But people, it's like reading. Sometimes when before you go to an exam, if you read it once, like Vivekananda, Swami Vivekananda, Eka Satyagrahi, one time read, Robo, one time it's done. Even I'm not like Eka Satyagrahi, so I want to go couple of times. But if I get couple of times, I can easily understand that. What I'm trying to say to you is, go through the go through this course couple of times, understand it, and then you come out of FOMO, you build your models, and then you will see a better life coming in. I don't want anyone to lose money on the name of FOMO. Everyone else doing it, not information. It is the most expensive sentence in the history of personal finance. So I'll go a little deeper into this. No, I'll go in my financial wisdom course, little deep into this. But everyone's doing it. Let me also do it. This is a FOMO thing. There are only 5 units, means out of 500 only 5 are there, 495 already purchased. You do not know about the 495. I will tell you 5 scenarios now. You see, the guy who has bought one might be already rich, he might be diversifying. Second, the guy might be a business. Third, parking his black money. Fourth, his parents both are working. Fifth, double income and no kids. You might be sixth, your scenario, you might be single earning and your wife is not working and your kids are small and your parents are not supporting you and your in-laws are not supporting you. In this case, how will you compare with 495 people? What are you trying to do with your life in the name of FOMO? They might have only 4 units, but if you go now, your cash flow, you may not have cash flows and you don't know the building will come or not if you're taking a pre-launch before RERA. But anyway, we'll not go into all those things. So I think we are done. I think thanks for taking your time. I want everyone to take out your notes, whatever you've done. Go through this as many as times possible, so that will help you not to fall into this FOMO trap. Thank you. I think in the monthly sessions or quarterly sessions, we'll connect and let's have fun. And don't do any mistakes related to the FOMO thing. So that's all, and have a great day. Thank you. Bye all. Stop sharing and stop meeting. Thank you.